Well, it's my great pleasure and honor to introduce Bill Hills to our CNext podcast. Bill is a mentor, a good friend, and probably one of the best CIOs I've ever met. So I'm sure he's got a lot of insights for you. And he's got an amazing background inside of work and outside of work. And so, well, Bill, go ahead and introduce yourself.
Thank you already for that great introduction. It's really wonderful to be here with you. I describe my background more or less as an eclectic background, as I've worked in several different industries and in several different types of roles. My career started originally working for state government in doing research on neighborhood preservation. I went on to head IT for a company called Chase Econometrics, which was doing economic forecasting models and providing economic forecasting services. My longer tenure was actually at Johnson & Johnson, where I headed application development for their Pharmaceutical Research Institute for almost 7 years before going off into consulting, where I consulted in life sciences, providing services to other pharmaceutical research institutions. Eventually, I ended up as an independent consultant working on my own for with groups like Virtual Distance International, which looked at the intersection of people, process, and technology, particularly when people were working in disparate organizations and having to communicate across large distances, and how effective that would be. And that actually ended up with me serving as an independent consultant initially with Navy Federal Credit Union, and then coming on board initially head of their application development organization, but eventually I moved into the position of executive director and CIO for Navy Federal Credit Union, which is where I spent the last 10 years of my 44 plus career, and where I retired from. Since retiring from Navy Federal, I've served a few board positions. I'm currently on the board for Lafayette Federal Credit Union, which is a mid-sized, moderate-sized credit union that's growing very fast, located in Rockville, Maryland. I also have been asked to serve as a technical advisor for several technology companies that are providing consulting services to credit unions and the like. And I also served on a couple of boards, most notably the board of Constant AI, which is a fintech providing credit union services in the lending arena. They provide end-to-end lending services, and as we'll certainly talk about, one of their services, like many of the other fintechs that have been out there in the industry, is evolving into AI, and in particular an agentic AI model. So I've sort of seen it around the globe from lots of different perspectives. As an amateur, I also sit on a couple of other volunteer boards, probably most notably is a board called Freedom's Wings, which teaches people with disabilities, provides them with flight experiences in sailplanes and gliders. It also provides instruction for people with various disabilities to learn how to fly sailplanes and gliders.
That's awesome, Bill. That's awesome that you do that. That's great. You and I are pretty similar in that regard. We've been around the houses and then spent the last 10 years of our careers at credit unions. And you and I were both in Northern Virginia at the same time. And I used to really enjoy our dinners once a month. We would go out and talk about, the life of a CIO. And it was great. But it was great for me to be with you and learn, and because I was new to the CIO role. But you've got an amazing background, and Navy Fed's an amazing organization. I mean, huge credit union. But one of the things I think would be very interesting for the audience is that perspective you just shared, right? You've got the CIO of a large credit union experience. You've got the board of a credit union experience, and you've got the advisory and board appointments of fintech serving credit unions. And so that's a real 360-degree view. I'm sure you've got some fascinating insights as it relates to that. But before we talk business, tell me a little bit about your personal background. I see the plane hanging there behind you, like Ricky Burke.
Well, as you indicated, I am also a pilot, actually, for some 45 years now.
Wow.
I've been a pilot. I started out with sailplanes and gliders. As I like to tell the story, my wife and I were driving down Route 1 near Princeton, New Jersey, and a glider flew across the road and landed in the field next to it, and somehow my car followed it. Turned out to be, go figure, turned out to be Princeton University's glider club. They were anxious to have lots of people from the community join the club. and learn to fly gliders and experience the sailplanes. So I did join the club, and for about 25 years, I only flew sailplanes. These are motorless gliders. You get towed up by another aircraft and you go out and soar, catching rising columns of warm air or other sources of lift. In fact, the longest I've ever stayed up is about 6.5 hours in a glider.
Wow.
And so it's quite the concentration and skill to actually figure out where all the lift is and how to efficiently maneuver the aircraft to that. Went on to fly. It was a lot of
No,
fun.
that's incredible.
Absolutely.
I was just thinking that sounds exactly like doing a big IT project. You're up in the air for hours and then you don't know where it's going to land.
Well, but you have a hope of where it's going to land, which
Yeah,
is typically back at the airport. I have visited many people in the hinterlands of New Jersey and other states that have flown in where I haven't quite made it back to the airport and ended up landing in the field. But just like any other project, you have a goal in mind and you do your best to actually achieve that goal moving forward.
That's great.
I went on to get my powered license, and I fly now a small powered plane, a single seat open cockpit, low wing plane called a Flybaby, and it's kind of my sanity check. And anytime I need to get away and think, I pop in the plane and fly. It flies what they call low and slow. Doesn't go anywhere particularly fast and doesn't go anywhere particularly far, but it does get you away from the day to day and get you out there thinking about, just what a wonderful world we have.
That's great. That's great, Bill. Thank you for sharing that about you. I just found that such a fascinating background you have both personally and professionally. Just switching gears into the topic for today. I've been fascinated to hear your insights from this kind of 360-degree view. Large credit union, small credit union, board, fintech, CIO. What are the technology challenges that you've seen and the perspectives from each one of those groups?
Well, I think it'd be helpful to point out, at least from the way that I look at it, that I've participated in most of those in slightly different eras of evolution of technology.
Mm-hmm.
I joined Navy Federal in 2009 and retired in 2019. Did a mandatory year off that my wife required me to do before, once I retired, to kind of reset yourself and go forward, and then started participating in some of these other ventures that have gone on, most notably, again, with Lafayette Federal Credit Union. And what I would highlight is when I was at Navy Federal, our challenge was a lot about growth. The technology was basic, banking technology adapted for credit unions, adapted for the size and scale of a Navy Federal. But Navy Federal at that time, and still is, was growing at double-digit rates, growing membership, growing assets, and the like. And so the technology platform had to figure out a way to keep up with that growth. There was certainly some innovation. We brought forward a mobile banking solution in 2000, and home banking solutions and the like. But probably the underlying feature of what we had to do was simply keep up with the growth and make sure that the members were well served at the scale that we were reaching.
Mm-hmm.
I flash forward to where I am now, sitting on the board of a credit union that's also growing quite rapidly. It's now about a $2.3 billion credit union. And I think when I started, it was a little bit more than $600 million dollar credit union. So it's really growing really well. But its growth is actually more in terms of the services it's providing, less in terms, at least from the board perspective, less in terms of the scale that it needs to make in order to do there, but much more in terms of the kinds of products and services it has to provide in order to stay relevant with its existing membership and to continue to attract and grow new membership as well. So the tasks are a little bit different. And obviously my perspective is a little bit different. Mm-hmm. In this case now, it's more about what are the right services that we have to provide and how do we provide them, given that a lot of the expectation about what we provide and how we provide it are not actually being set by us. Mm-hmm. They are being set by our members' interaction with other technologically enabled services, whether they be banking or something else, and they are set by, what are their sets of needs and where do these things intersect. And so the growth there is to a large extent around, relevance and service as opposed to what I saw internally, scale and capability.
It's a really interesting point you made, right? The scale of Navy Fed, which is rare air, because the largest credit union by far,
Right.
right? So you
Yeah.
had, you were more like a super regional bank, scaling from a technology. And then you talk about
Yeah.
the product, the growth in terms of services. And you said something important, defined by the members, right? Expectation. I don't know if you've experienced this, but I've seen this where internally companies say we're focused on the member, right? But actually, they're really focused on making life easier for themselves, right? As opposed to the member expectation, like you said, not only in banking, but other, services that they
Right.
consume, right? Have you seen that? And if you have, why do you think that is?
Well, I think that's the constant pull. The tension that exists is what do we do that makes our operation better, faster, stronger, et cetera? Because we certainly have obligations to, those who are stakeholders in our enterprise around, speed, efficiency, cost, and the like. So there's a lot of stuff to try and make us better. And in many ways, that's easier to see. And so it's alluringly attractive to go and say, we can refine this process or add this technology that does something internally much, much better. And it's a little bit easier to see and artificially perhaps a little bit easier to measure. Where the tension happens, of course, is that some of those activities that make us more efficient, better, and faster tend to have some sort of downstream impact to a member that isn't always a great experience. And being able to look down the road and see how that evolves is one of the bigger challenges and one of the things I think is very hard for internal planning organizations to do. By the same token, our business partners are out there working with their members and so forth, saying they want this, they need that, they need, these kinds of capabilities, or they're seeing those in our competitors and we've got to provide them. All right. And then we'll get on to what the vendors are saying. But so they want to provide this quite often. Particularly for very new capability, that's the antithesis of driving efficiency into the organization. They're not going to be clean, sweet, easily implemented, fail safe, et cetera, right out of the bat. You're right. I think, the challenge for the CIO is to understand, where that tension is, how that tension is, and then be able to, at some points arbitrate, but in many points advocate for where are we as an organization and what's the trade-off we are able to, willing to, or have to make from a strategic standpoint, from a tactical standpoint, from a member service standpoint. Because they are one of the few arbitrators that sort of see that whole picture.
Yeah. Well, and the other challenge, you probably didn't have this so much at Navy Fed because your tech budget was way north of $1 billion. But at Lafayette, I'm sure your tech budget is a lot less. And how do you navigate that?
Well, I think there are the challenges. Even Navy Fed at its size, we're still playing in the financial services arena, and so even at its size in our tech budget, we're competing against other tech budgets that are much larger, coming out of big banking institutions and the like. So it's not like it was that there was money flowing that I could do lots of experiment.
Yeah.
In fact, one of the conversations I think we had way back when was the notion that, the entire credit union industry does not have the same degrees of freedom that the banking industry does to experiment with lots of new things, have a lot of failures, and then recover from those failures because we have the disposable income to do that.
Yeah.
We don't. So the scale was a bit different. I had probably more latitude than organizations that are much smaller than Navy did, but it wasn't infinite. And that didn't necessarily mean that the leadership and my colleagues understood the trade-off.
Yeah.
That was a conversation. That was a constant conversation.
That's a good point. That's a good insight because you were competing against, even at the size of Navy Fed, with the guys with huge budgets, right? So you have to deal with that. It's interesting. When I was talking to Jim Phillips, the CIO of Schools First, and his podcast will be coming out as well. But he said at Schools First, they just focus on service and growth comes. They've never had growth strategies per se. They just stay laser focused on the member and the member needs and the member service, and the growth comes with it. Is that what you were seeing at Lafayette too?
Absolutely. Lafayette certainly has the growth aspirations and the like. but it really happens through service and through providing the right types of services and capabilities that their membership, particularly in the Northern Delmarva area, that their membership is really looking for. And if you provide that and you're hitting the mark, then the growth comes. The challenge then becomes, does the internal organization have the foundation and the infrastructure in place to meet that growth, or and provide it in a seamless, smooth fashion?
Yeah.
And so, there doesn't need to be sort of a technology centric thing that says we're going to grow and we're going to invest all this. It really should be, here's what our members need. Here's how they're using our services. Here's where they're going next. Here's who we want to attract next and how they fit with our field of membership and the like. Here are the things we need to do. And we've got a foundation that's solid enough and capable enough to build on top of it.
One of the things you taught me early on, Bill, which I carried through my next 10 years at Fed, was you taught me this phrase, which I love. Joe, as a CIO, you need to learn how to lose on your terms. And I thought,
Absolutely.
that is so profound, right? Because I had this conversation with Ricky Burke about, sometimes we fail because we become technology purists, right? And so,
Yeah.
as a CIO, I said, well, if you're going to scale, you need to do this and this, right? And, we need to build all this and we need to do all this. And of course, the business will say, no, we got to get going. And so I always got, I learned from you that you have to give, but you have to set the condition for success in the future. So you got to get. It's almost like a negotiation. Okay, let's do this, this, and this with a promise to come back and do this and this, right? And I think that negotiation skill of a CIO is huge.
Well, I think that any CIO that doesn't realize that every conversation is really a negotiation is in trouble, from the get-go. It truly is. And the whole notion that there are trade-offs. This is, an industry where there is no true perfect solution. There is no true perfect one answer. It's all a trade-off. And then recognizing that we're each the business is coming from a perspective and IT is coming from a perspective. And you hope that these perspectives have enough interaction and overlap that there is some common ground there. But you also have to know that at some point, the types of things that you, in your history of being a technologist, or the absolute, tenets of the right thing to do, don't necessarily serve the business really well.
Yeah.
Right. And so you really want to focus on, well, how do I serve the business, with maybe planting the seed of how do I also drive it back so that eventually I can get the right technology solution in, the right platform, the right protections, and all the other things that we kind of worry about in the background that, people say keep us up at night.
Yeah.
But first and foremost, you do have to recognize it is about the business.
Yeah.
It is about the member service.
I like what you said. Every conversation is a negotiation. Just shifting gears a little bit,
It's the same tactic I had with talking to my children.
That's a good.
You didn't realize that every conversation was a negotiation. You already lost something.
That's fascinating. That's great. But just shifting gears a little bit, I wanted to talk about your board perspective, right? Your seat on the board, looking from that angle. What do you see are the challenges? What do you see are the opportunities? And maybe what have you seen that surprised you from sitting in the seat of a board member versus the CIO?
Well, certainly sitting in the seat of the board, and separate it because I sit on the seat of the board of a credit union, and I sit on the seat of a board of a fintech. And I think there are some, profound differences in both what you see, what gets shared with you, and a little bit about what your role is. Sitting on the seat of the board of a credit union, where our role is to help with the strategic outcome, the strategic outlook of the credit union. There is the tendency to draw to want to be in the middle of things. Particularly as there's so much uncertainty about what technology is going to work, and there's so much fear and uncertainty and doubt as to what threats and risks the organization is running, and we have much more of an direct interaction in a different way with the regulator, and a lot of concern about how the regulators view the kinds of initiatives and the kinds of action that we might take. And so from that perspective, it becomes this kind of pull more than I realized. Board members trying to maintain their role of thinking about the future, enact their role of providing, approvals for various initiatives that get done at certain levels without delving into, well, this is how you should do it. I love being used as a resource when asked, but that's where it should be, is you're a resource when asked. You're a guide as part of a collective of members of the board, and you are, a steward of sort of, here's the how we want to serve members, because we are members, we represent the membership, how we want to serve members and how we're aspiring to get there.
Yeah.
And I think that is a challenging set of perspectives to reach. And it's hard to stay in the right role all the time.
You're right. No, that's a great point. There's a very distinct role for board governance, and there's a very distinct role for management. And you don't want
Right.
those two things intermingling. And so it's great that you can do that with the discipline that you have at Lafayette. And then tell us about, fintechs and being on there. I'm always interested in, what fintechs think credit unions need versus what credit unions actually need. So talk to us about that.
Well, I sat on the board for Constant AI for the past couple of years, but I've also participated in at least some early startup of a couple of fintech coalitions that are trying to figure out how they interact and work with credit unions. And in those coalitions, they were largely actually being formed because way too many individuals in many of the fintechs really didn't understand how to approach a credit union, how the credit union industry worked, how they are motivated. One of the first things I would say to some of them is, you don't go in talking about how much money you're going to save them, because that is not the first conversation they want to have. They want to have a conversation about how well you're going to enhance their ability to serve their membership, and how well you understand the notion of membership versus customers. And you have to understand their scale. But, those are the driving factors. Cost and saving monies and all that come into it, but it comes in as a product of serving the members and the membership. One of the things I liked about Constant was they asked the question very directly about, how do we talk appropriately with credit unions? How do we interact with them appropriately? They wanted to understand the whole mechanism of how credit unions get things done, both with their direct interaction with their members, but also their interaction and use of credit union service organizations to provide certain sets of services, either to other credit unions or indirectly to members, and how all that worked. I was asked to join the board. Yes, the key says, partially I was asked to join the board to be a sounding board for what's right. How do we do this? And after, a great conversation and wonderful insight by the CEO, they recognized that being able to skip a payment of a loan was a fairly unique service that credit unions offered. Credit unions with robust membership do it fairly routinely, but you do have to check all the boxes. You have to make sure they're eligible in that bit. And that takes a lot of time for something that you're likely to grant anyway. And so, adding an agentic AI agent that can have the conversation, do the actual work, and execute against the skip a pay and track all of that appropriately was a wonderful way to enter into that service. But they did that based upon their deep understanding of what was important to a credit union. They could have come in with something that says, we're going to take over all your loan and loan processing, and we're going to save you oodles of money and so forth.
Great.
That would never flow.
Yeah, that's great because my experience is you do see fintechs that come in like you just described with a passion to make a difference on a problem. But a lot of fintechs also, they're on the path to monetize, right? Or get acquired by a bigger player.
Right.
And then you kind of lose that intimacy and focus, right? Yeah. That you had when you were a startup. But that's a really good segue.
Well, it clouds your judgment.
Yes, exactly. They go from this pure heart, motive, good motivation to, hey, it's all about our bank balance. But, that's tough. The entrepreneurs are great. Don't get me wrong. I'm not an entrepreneur, right? And you made a comment about the speed of business, right? And you also made a comment about there's some parallels, right, to other technology disruptions, and also this speed element. Talk to me more about the speed element that we need to think about as we talk about generative AI and agentic business.
Well, preface it first with the notion that by and large, since I'm a little bit older than you are, by and large, the major history of computing in the world happened within my lifetime. From UNIVAC down in the basement of the University of Pennsylvania, I think it was UNIVAC, as one of the first big computing machines up to what we have now. That all happened within the 72 years of my lifetime, which is awesome to think of, in the first place. But when you look at, what's going on with AI now, whether it's generative AI, moving on to agentic AI, and moving on to agents, and there's, a lot of fluster around it, and people are, running around with their hair on fire in many cases. I've been asked, well, why is this so different? And my answer is, it isn't. We've gone through these kinds of major transformations in technology that have resulted in transformations in the way we do business time and time again over those years. What is different and what has been a trend is the speed with which it's happening. So the speed with which we went from, internally owning our own computers to going to the cloud, to going to mobile, to going to, other technologies, each one of those happened at a faster and faster pace. And this move towards AI is happening at, people keep saying, well, it can't get any faster. There's probably something else that's going to happen, next that's going to be even faster. But the transition is happening at a faster pace than we've seen before. What I think that companies need to do is what they've done before. They'll have to pace it. They experiment, they try, they, do various things. Some succeed, some fail. They take risks, they take, bets. Some are fast followers, some are slow followers, some are innovators. All those things are going to happen. They just happen in a very compressed time.
Yeah.
My advice to both credit unions and to fintechs alike is that this is now a game of partnerships. None of us have set up our organizations to be fast enough to understand everything quickly enough at a level deeply enough to really take full advantage of. And so the conversations across organizations, the conversations across credit unions and with fintechs who are willing to talk to them versus sell to them initially are, I think, going to be critical in being able to ingest all this quickly enough. We'll still be behind the eight ball because we as humans still got to catch up.
Bill, I think that's a huge insight. But I wanted to just kind of loop back to the point you made because I think it's so important. You can learn by looking back, right, through other technologies disruptions. There's a lot of commonality there, right? So, there's a lot of uncertainty, fear, uncertainty, and doubt. You can take some of that away by looking back. But your key point is you're going to have to move at a pace you've never moved at before. Right. And you need to be thinking about that. You can't just think about the technology, right? You've got to think about the organizational ability to operate at speed. Now, if you're going to be operating at speed, you've got to be very good at operating today, right? At your current speed to be good at the higher speed, right? To your point, like we were talking baseball, right? Can you take a fastball in the major leagues? The fundamentals are the same, but you've got to think about how do you do that. And I think the point is you've got to be good. And I see a lot of companies thinking, well, agentic AI is going to make me good. No, it's going to make you better. You have to be good, and you have to go from good to great. Or better, best, better, best. Good to great. You can't just say, hey, I know nothing about this, but with agentic, I'm going to be an expert overnight, right?
Yeah, you really do need to have good fundamentals, or at least a good fundamental framework for the next thing, right? You have to have a foundation that you can base it on. You have to have a concept that is solid, because it's not going to correct either of those things. This stuff is going to execute whatever you tell it to execute, being very pedantic about it, and it's going to do it on whatever foundation you start with.
Yeah. I agree with you. Things that you said earlier, right? Member expectations, right? Well, member expectations are going to move a lot faster. So you got to be ready for that. You just mentioned risk, right? Your ability to detect and correct, risk and issues is going to happen very fast. And you've got to be doing that at another speed. And I think if you focus on that, I think it'll serve companies well. But this has been such a great conversation. And I really thank you for your time today. And hopefully
absolutely a pleasure.
Our viewers will get a lot of benefit from the unique perspectives you shared, from inside the credit union to the board of a credit union to the board of a fintech, and all of those combined. Well, thanks, Bill, and you enjoy the rest of your day.
Thank you so much.
I forgot to mention to Bill when we were talking about dancing that I tried to dance with one of our horses once, but it didn't work out well because they had two left feet.